Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm live in this live session with you all. And I hope you are hearing me properly and watching me properly as well. There are issues with the stream, so that's why I came up a little bit late. But hopefully, things are now stabilized and you all can hear and watch me properly. So in this live session, I will discuss about the markets which have been dilly-dallying again, as we have discussed earlier, and I'll also discuss about one of the stocks that I have missed out all throughout. Uh, last year, 2 years, and it was a non-performer in the white goods space in this uh, you can say summer play, but is performing extremely well. I just had a look at it in the morning and I thought about making a video on it or in the live session to talk about it. So we'll discuss about that stock and I'll answer your queries as well in this 20 to 30-minute session. Hope more people join in. I understand it's a weekday and it's afternoon of a weekday, so not expecting a lot of people, but hopefully in the next 5 7 minutes more people should join in as we look forward to more people joining in and beginning this session in earnest. uh, I would first give you a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. So that's a disclaimer on my behalf. And a small request that kindly do support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. So you can pay that. You can become a WhatsApp member on a yearly uh, basis, and you can either become a member on YouTube by clicking that join button, and you get all the, you can say, updates of Patreon on YouTube. And if I get a lot of members on YouTube, eventually I'll definitely start with a Friday weekend members only live sessions on every week on Friday. But for that, a number of you can say members on YouTube should be there. So that's all the means the queries that I would be saying, that I'll be answering queries in a bit or so. Uh, so before we begin with the session talking about the markets per se, let's just discuss a little bit about sports, a passion that I love watching and all. So in football, Manchester United is doing well, winning four of their last five matches, and now they are on the heels of Man City and doing extremely well in on that front. Rashford has been playing well, and all throughout they have been scoring very good team goals. So now, if they win the next match, which has been postponed, so it would take a while before their next match come up. But if they win that, they'll be probably 1 point behind Man City all throughout, which is at the second position at the moment. So looking forward to that. In Test cricket, so India did eventually win a nice Test match altogether, but day three was all India's, and the way Jadeja bowled and all. So it's very good to see India win a Test series again. And over the last 11 years, since 2013 January February, India has not lost a Test series, and since 1986, apart from a loss in 2004 in the Border Gavaskar Trophy, in which Adam Gilchrist captained Australia for three of the four test matches. And eventually, Australia won that. And in 2000, when South Africa won a very controversial, you can say, a test and one day series in India. And then we had that Hansi Cronje saga in 2000 July. So in 2000 we lost, in 2004 we lost to Australia, and in 2012-13 we lost, as I have been kept mentioning about it, the Monte Panesar led, you can say, although he was not the captain, but Monte Panesar spun a web towards India, and in 2012-13 we lost that series as well. So we lost only three series over the last 37 years. So that has been the commanding performance of India which is absolutely magnificent to see. And looking forward to the next two test matches in March and then the one day series. Not a huge fan of IPL, so will not be following that or the women's IPL. But yes, looking forward to these two test matches and the one days. Elsewhere in New Zealand, we had England steamrolling New Zealand in that test match, and it was a day night test match, probably the first in New Zealand. So it's an interesting format that they have come to day night test matches in New Zealand, because that fits into the timing in Asia. So it starts at 6:30 in the morning in India. Otherwise, test matches in New Zealand begin at 3:30. So that's a good thing. England steamroll them, and England look good and look set to probably win the next test as well. The way they have bowled and batted as well in their baseball fashion. So they have been doing that as well. So in hockey, we are seeing China doing well in the Women's Pro League, and it's not surprising because they have made a lot of changes and doing well, drawing with Australia and then beating USA. So it looks like USA could be the team, or England, USA or England in the Women's Pro League, that could get relegated, and India getting in there in 23-24. So that's what happening in hockey. Most of the matches are now taking place in New Zealand, and then we'll shift to Australia at the end of this month. So that's what is happening in sports. Let's come back to the markets, as we are now into the fag end of January, into the fag end of February, and at the moment we are in the situation where the market is still stuck in a range bound manner between 17,800 to 18,200 levels. I don't see a respite, at least for the next 15, 18 days, at least for the next 2, 3 weeks. From this, I think the market could be still be range bound, although we are seeing meaningful moves in many mid cap, small cap companies. And although the mid cap index itself has not done that well over the last couple of weeks or so, but specific stocks have done exceedingly well. There have been stocks in my portfolio that has done well, and hopefully, if you are having mid cap portfolio, that must be doing pretty well. That must be doing reasonably okay. So I believe that, and I have said that to members. I have talked about it to my members on Patreon, YouTube, WhatsApp, that I feel that the mid and small cap rally is upon us. That has evaded us for 18 months, 17, 18 months. It will be 18 months by March end. So I think we are in for a decent amount of upside over the next 8 to 9 months, until about November or so. I have a feeling that there will be a sustained up move in these stocks, and these companies will continue to perform. So, in my opinion, this is the time to get into these companies. This is the time to get into high growth, good quality companies that have produced very good results in the last quarter, and the stock has fallen. So a lot of such stocks are in there. You have to look at companies where the growth is intact and the management is quite bullish about the next year, say FY24 or next 2 quarters, and the stock has fallen 30-40%, and there are a number of them in the mid cap arena, and you can just sense that these stocks are now set to perform, and we are seeing that happening. So if you get in there over the next 6 to 8 months, you're going to make a decent amount of money. So overall, the Nifty could be range bound because of the banking index lagging, and remember, banks did exceedingly well in the second half of 2022 calendar year. So it is not at all, you can say, reasonable to expect that in the next 3 4 months banks will continue to perform. Remember that, and this is since this is a Sunday, so in on Sunday I could not put up a video with some kind of learning, but one thing I want to tell you from experience is that companies or stocks that have done well in the previous year, 90% of the time do not do well in the next 2 3 months of the next year. Maybe for the next 10-15 days in January they might do well, but then eventually they fade off. Sectors fade off and then come back by the fag end of the year. So I have a feeling that banking could take a back seat. IT was a laggard today, but I think IT is coming back and coming back with a vengeance. People have to look at sectors, and I have been mentioning that time and again. People have to look at sectors from a medium term point of view of one to 2 years, which have been battered out of shape over the last couple of years since October 21. So those companies that have performed exceedingly well over the last, or have had stable earnings over the last 18 months, yet the stock has catapulted down, say 40, 50, 60, in some cases 80%, they will come back with a vengeance, and that is exactly what is happening. So you have to be extremely careful as to what you're getting into. Don't get into euphoric stocks, if I may call it that. The stocks that have made highs already and are trading at higher valuations, they will end up eating your money over and over again. So get into companies that performed exceedingly well in 2021 and corrected over the last 18 months, but the numbers have been robust. So that's what I'll say. But I believe that over the next 8 9 months we could see a sustained mid and small cap rally that was not quite seen over the last 18 months, because we have seen only decline in there. So I think new highs would be made in both mid and small cap index, and these companies will keep on performing, provided the next couple of quarter results, the March and June quarter results, are robust. We could see a big move till July, and then with a little bit of consolidation in August or early September, we could see another move till end of November on this mid and small cap companies. So that's about the markets. Now let's come to the company that I wanted to talk to you about, that have been probably performing, but I could not have a look. And now it seems that technically it does sound that the stock could have a reasonable upside from current levels. So that's why I brought to you this company, and the results do seem to suggest that we have seen the worst in this stock. So let me take you to the screen of website again, and then we'll discuss about this company in detail. So this is the company. Basically, I wanted to talk to you about is a screener. Let me refresh so that probably a refreshed rate would come up. So it's around 1110 rupees the stock is trading at the moment. So basically, why did it come into my radar is that if you look at the stock chart and the stock price and the movement of the stock over the last 3 years as to how stock has performed, and over the last 10 years as to how stock has performed, it has been under a range or in a range after a huge up move that we saw. So if we go back into historical prices of Symphony and the way it started performing in 2013, right in front of my eyes, the stock went from around 170 all the way to something like by 2015 up to 1500. So in 2 years the stock became something like if I'm not wrong, huge, something like 10x or so, 8x. And then after a little bit of consolidation, staying right there for a couple of years, in 2018 or so, early part of 2018, Symphony became so big, 2100. So from around 150 to 2100 was the journey of Symphony. This was the euphoric high made in January of 18, and since then it has been 5 years and the stock has not touched these highs. And that is why I say that when you see such big moves, you have to book profit. So another learning I can give you here, by just looking at the PE ratio over this 10-year period, that during that 2017-18 phase, when that move happened and the stock was trading at that 2100 levels, it was trading at 90 times earnings. This was in January of 2018. The best the stock did was in 2015, in which it was trading at around 97 times, 99 times earnings. So after that, yes, it did hit that in 2019 in the summers, but the EPS came down altogether. So although it came to a PE of 100, then fell, it came to a PE of 101, 102 and fell again. So basically what is happening is that at a PE closer to 100 is the peak for the company, and then it falls to somewhere around 30, 35. So this is a huge decline in the PE or shrinkage in the PE that takes place. Now, what has happened recently? Recently, what has happened in terms of the PE thing is that we have been meandering around this 44, 45 band and not at the higher end. So I won't be surprised if we go to the higher end and go towards these levels of around 70 times and even surpass that to go towards 90, 95 times if the next couple of quarter results are good. Now why I believe that 90, 95 times this stock could trade at is because of the numbers that it has produced in the December quarter, which have been quite decent. So in both September and December, there have been improvement on the numbers compared to last year. Although June numbers weren't that encouraging that much, but September and December were good. Even June was pretty decent, but the bottom line got hit with extraordinaries and other things. So what happened was things weren't that great. So let's look at the September and December numbers. In September 22, they did sales of 274 crores, 14% margins, operating profit of 37 crores. Whereas in September 21, they did 220 crores, 18% margin, which is pretty decent. And that is where I think things looked good earlier because the margins were pretty decent, and eventually profit of 30 crores versus profit of 32 crores this time around in September 22. And that is why the numbers came out in November. The stock did not do that well. So if I look at the price chart again over the last say 1 year, and I look at say the September numbers must have come out again in November or so. So nothing much happened. You see from October onwards, 880 in November, probably post results became 820, and it hovered around there. And then the move began by the, you can say December or so, or end of November, early December, after the September numbers. Now, why the move began? Because normally what happens is that informed players in the street, they know about what is going to happen, say in the next quarter numbers and all, and then the move starts to begin. More or less, they have an understanding. So in December, what they did was much better. 277 crores of sales in December, margins of 16% versus 14% versus 10% in June. So improved by 6% over 2 quarters, 16% margin. Operating profit of 44 crores versus operating profit of 30 crores, where the margins were 15%. So year on year growth of 1%, 100 basis points on the margin. Quarter on quarter growth of 200 basis points on the margin. And we have the result of that is that 32 crores of profit came in, net profit came in last quarter, 39 crores came in this quarter. And if you look at December of 21, then the profit was around 21 crores. So a huge jump of doubling, probably nearly doubled. So actually profits nearly doubled. If it was 42 crores, it would have doubled. So profits nearly doubled, EPS of 5.5 versus 3 rupees. So everything looked good here. So if we extrapolate this number for March, then we could be in for a huge surprise on the numbers front, because I feel that at 17% margin, even the margin expands by 1 percentage point. The sales could be pretty big. So we have seen from 205 crores. So if I just calculate here, from around 205 crores, the sales figure has gone up to 277 crores. That's a jump of nearly how much? This is a 35% jump in sales. Now if I on the March numbers, if I say there could be a 30% jump on the numbers, then we are in for a treat, because we will be having a situation where the company might be doing 500 crores of sales in March, which is pretty big. If they do 500 crores of sales at 17%, the numbers could be very interesting because if I say 17% margin, 85 crores of operating profit versus 44 crores of operating profit versus 82 crores last year. Yes, but the margins were 21%, this time 17%. So people will take that into their stride, that quarter on quarter the numbers are improving, and they are improving over the last 3 4 quarters. So overall, after you have seen these number projections and all, this is the reason why the stock from November before September results was at 820, and today it is at around 1100. I think one can still buy this and add more around 1050, 1030. And if you see on the 8th of February, there has been a large trade of something like 11 lakh shares or 1 million shares have happened on that day, and the stock has been going up. Now people might say that it has gone up from 800 all the way to 1100, so it is already up 35%. Why to buy here? But if you look at a 5-year chart, you look at a 10-year chart, we are in a situation where the stock went all the way to 2100. So I won't be surprised that all this space, uh, after the decline, you see that the stock went to 870 on the 5th of October 2018. And if you look at a 1 year chart, the stock was stagnant at around 870 or so, even in November of 2022. So over the last 4 years, the stock has done nothing. I think it is about time that the stock breaks out and does a lot of things in this period. So I believe that this stock or Symphony is set to do much bigger things in the months to come. Let's look at some other numbers. Let's look at the balance sheet. So their reserves have declined a bit, but it's around 800 crores. And best thing is that the borrowing have reduced. Of March 22, they had 250 crores of borrowing. September 22, 187 crores, and I'm sure by March 23, it could reduce even further to closer to 160 crores or so. So that is a positive sign that is happening. If you look at debtor days, that has increased. So inventory days might have peaked out in March of 22 and might now decline as we go along because the pandemic is now behind us. So things should improve going forward. In terms of shareholding pattern, so 73% is with the promoters, 4% has been pretty stable with the FIIs, although they have sold. So from 4.5% in March 22, now they have 4% till December. DIIs have slowly increased their stake, and what has happened is that public shareholding has reduced. So uh, that is pretty good. That is also a positive thing for the company. So Symphony is a buy at current levels and now dips to 1050, 1060. And I won't be surprised if it can give you 30 to 40% return over the next 6 8 months, 9 months. I think the move has just begun, and I won't be surprised if we see 1550, 1600 on Symphony over this period. So that's the call on Symphony Limited. So, all right, guys, I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Let you can ask queries now for the next 6 to 8 minutes and answer that. Okay, so Stovecraft, not that positive, Ashok. I believe that Stovecraft should come up with couple of quarters of strong numbers, and only then probably I would say that one should get into it rather than at this point of time. Kindly make a video on a consumption theme in India, your key calls and views on it. Surely, I'll do that. In fact, I have done videos on consumer stocks, a lot of them. So you can probably go through them if you just move through my videos, and you'll understand that there are, you can say, concentrated or dedicated videos on the consumer stocks, but I'll make one more for sure. Okay. So tube investment is a long-term theme. This is the time to accumulate the stock. Not that I would say that it would just go up immediately, but I believe tube investment is something to be looked at from a perspective of 3, 4, 5 years, and it should start performing and doing well. 2,500 is the price. Currently, the stock has declined substantially from the top. It's around the 200 DMA that a reversal took place, which was around 2,400. And I think after hitting 3,000, there was a profit booking call on my behalf on that. I think now tube investment is looking attractive to be bought into from a 2, 3 year point of view. So there's a call on tube investment. What's your view on Manevar? Positive, but the results weren't that great. So any dips towards 1150, 1140, even at current levels, one can accumulate. Again, a 2 year time frame. I think it will come back big time, and the stock should perform. So that's the call. Uh, Supply, if you are sorry, Asifa, your view on Cipla, the V's Lab at current market price for long term. Cipla, I'm positive, although there is a, I mean, issue with the uh, there is issue with the US FDA. So if that rectifies, then you buy. But if you have a 4, 5 year view, these are the time, these are the difficult times when you buy both DVs and Cipla. But I think in DVs, technically speaking, I feel like that the stock might head towards 2,200, over the next 6 months. If results do not improve, you could get it around 2,200 going forward. Policy Bazaar near to break even. Is it worth to invest now? I think Policy Bazaar, if you are invested and you're not losing a lot, probably it's better to shift to some other company rather than staying with that. See, I'm Neeraj, I'm positive on the textile sector, but I won't say that this will be one sector that will outperform everything. There are stocks I was holding on to PDS just recently. It's a decent company to hold on to from a 2, 3 year point of view. Arvind Mills, if the numbers improve, and there are other companies in the textile sector, but textile is one sector in which other countries have taken over India, and it's unfortunate. So things aren't that great in there, and there's a lot of competition. Margins are less, so that you need to keep in mind. Bipin, I really don't know what will happen to the Adani stocks. I would say that apart from Adani Enterprises and Adani Ports, do not look at any other company of that group. Even if you want to buy these companies, buy very minuscule, probably 3%, 4% of your portfolio, and leave it. That would be my call. Positive on SRF, another stock in which I gave call, and thankfully it worked out. Just recently I gave a call on it, and it was around 2,300 at that point of time, 2,280, 2,300 or so. Uh, Overall, long term, I'm very positive because I've been studying this company over the last 2 weeks or so. They are doing a lot of things with respect to expansion, etc. So very positive on SRF from a 3, 4 year point of view. Their expansion will come on stream by 25 end or so, or if by end of FY 25. So all these will augur well going forward. If the agrochem industry keep performing, if they that go through a recession, then SRF could end up struggling. So Saxoft, I don't track. I won't be able to comment on it. Sorry for that. See, Vimta Labs is something I did follow earlier. I would say, apart from one or two pharma companies, do not get into much. Pharma will come back, but will not come back with a vengeance. I think there are sectors in the white goods space. There are stocks in the home improvement space which work abroad, and even in textile, even in other sectors, mid and small cap companies that have declined over the last 18 months and are set to perform extremely well. So look at those companies at the moment. Alright, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thank you.